Hi, everyone. Welcome back to Atrium Research's YouTube channel. Today, I have the pleasure of interviewing Mark Jarvis, the CEO of Giga Metals Corporation, which trades under the symbol GIGA or Giga on the TSXV. Today will be the first time we host Mark, as we recently initiated coverage on Giga on February 5th. Just for a quick overview before I hand it over to Mark, Giga Metals is an exploration and development company currently focused on its Turnagain nickel cobalt project in BC. The project is at the pre-feasibility stage, having reported an NPV of 574 million, and yet poses substantial exploration potential, which we'll discuss in this presentation. We currently have a buy rating and a target price of 30 cents per share on the company. And Mark, thank you for being here today.
Well, very nice to be here, Ben. Thank you.
And then for those unfamiliar with the story, could you kick things off with a brief company overview, run us through this presentation, and then we can get into some questions after that?
Okay, Ben, that sounds good. I prepared a very brief presentation, just a quick overview, and then we can get into questions. So this slide here shows a picture of our camp. We've got a 1 kilometer airstrip beside the camp. And there's the Turnagain River flowing beside it. So as you can see, the Turnagain is a low volume river. You can also see that the terrain is very ideal for open pit mining, which is what we're planning to do. It's also very trivial for road building. It's easy to build roads in this kind of terrain. To the east of us, or pardon me, to the west of us, where we're looking, you can start to see the beginnings of the Coast Range Mountains. It's really still the foothills, but you get into the Coast Range Mountains, you get into the Golden Triangle, which has got a very rich mineral endowment. But it also is something that cleans out the precipitation. We're in the rain shadow of the Coast Range Mountains. And so the amount of precipitation, as it turns out, that we get here is absolutely perfect. So we've got a neutral water balance model for this mine, which is, it couldn't be better than that. So it is a joint venture between ourselves and Mitsubishi Corp. Mitsubishi Corp owns 15% of the joint venture company, and we own 85% and are the operator. Now, this is the part of Mitsubishi Corp that is the raw materials division within the commodities trading division. And this is a part of Mitsubishi that likes to take minority interests in development projects. They help to get them built. They help to get, a team of companies together to get the project built. And they've done this successfully again and again and again around the world. So that's their modus operandi. They do not want to build. They do not want to operate, but they are very supportive. And they also, when the project gets built, there's access to Japanese debt financing, which is amongst the most competitive in the world. So here's some of the highlights from the pre-feasibility study that we did. Typical annual output on a 30-year project is 35,000 tons a year of nickel, plus about 2,000 tons a year of cobalt in a concentrate that grades 18% nickel, 1.1% cobalt. The initial capex, 1.9 billion, and our site operating costs, 385 per pound nickel. So that's in concentrate at the mine gate. Now you transport it to a smelter in our model. The C1 costs, accounting for transportation costs, a smelter cost, and but also adding in 50% of the cobalt byproduct credits, which is the smelter terms that we assumed. You've got $4.65 a pound of nickel. Flow sheet could not be simpler, and that's important because it's extremely low risk technically. Crush it, grind it, float it. And 99% of the nickel and cobalt that are recoverable are in one mineral called pentlandite. And so the flotation circuit has to float one mineral and suppress everything else. Again, simple. We don't need any complications to the circuit, such as de-sliming circuits, which some of our competitors need. It's because this deposit is geologically quite young, and we don't need circuits such as magnetic separation. We don't have any awareurite in this deposit, so it's just a simple float the pentlandite. Very large open pit mine with an extremely low strip ratio of 0.4 to 1, so 0.4 tons of waste per ton of ore through the mill. That is truly remarkable, and it does help with the cost. We've also got, I don't have a list here, but we've got very high recoveries for this type of deposit, especially compared to the projects that are lumped in as our peers. We did a geometallurgical program along with our PFS, and we have developed an incredibly high precision recovery algorithm. In other words, we can know block by block with very narrow error bars how much nickel we're going to recover from that particular rock. And we did this on 75 different samples, ranging from high grade down to what we knew was waste, and from all different parts and depths of the deposit. It's going to be a low carbon operation. We think we've got a path to carbon neutrality. And we modeled selling to a smelter, but because that's a market that exists right now. But we think the market that we'll develop will be pressure oxidation facilities, because that provides a more direct path to the cathode. And that is batteries are the fastest growing end use of nickel today. So BC is very, very much used to mining. We've got lots of active mines. We've got a process for it. So it's a good location. We've got access to deep water ports, the port of Stewart, which is a year-round deep water port. And it's open for business. It's a privately owned port. They are eager to do more business. And so that would give us an outlet to, Asia and frankly, the rest of the world. There is also down at Kitwanga, there's a railhead. So if we did want to ship to Eastern Canada for any reason, we could also go that route. We are in the jointly claimed territory of the Tahltan and the Cascadena, and both nations are generally supportive of mining as long as you're responsible and respectful about it, which we are. And we've got good relations with both the Tahltan and the Cascadena. This is our reserves, a total of 950 million tons, just shy of 1 billion tons of reserves, between both proven and probable. That is a subset of our resources, 1.5 billion tons measured plus indicated, with another 1.1 billion tons of inferred. And that is all contained in this area here. We've got holes 4 kilometers away from the resources that are very similar to what's inside the resource. So if we want more low grade, we just have to keep stepping out. And I can't claim more tons until we drill them, but any geologist looks at this and goes, yeah, you're going to find more. And in fact, we think we've explored less than 20% of this whole mineralized intrusive. And you can see there's different intrusive phases. This attic zone is quite different from everything else, and we'll get into that in a bit. This is a zone that we had written off. You can see that we drill some drill holes here. It's because, well, I'll get into it. So because it's underexplored, last November, I contacted a geoscientist named Dr. Stephen Beresford. He's based in Perth, Australia, from New Zealand originally. He's a university professor, but he's also a very practical exploration geologist. He's had some big jobs with big companies. Currently, he's working with a company called Power Nickel, which has been having remarkable success drilling on their NISC project in Quebec. And working with Stephen Beresford, they hired him to go through all of their data and suggest where the targets are and the exploration techniques to use to explore for them. And since they've been following his advice, it's just been incredible what they've been hitting there. So I reached out to him to see if there was, if he was available and interested. And indeed he was. The first thing he said was, oh, he says, I've been fascinated by the Turnagain ultramafic complex for years. So he's really a pure geologist. And he's been through all of our data, and he has indeed identified some targets. Now, just to be clear, we didn't ask him to look for more low grade. We know where there's more low grade. We asked for high grade targets, and he's identified several of them. So this is one of them. This is a picture of a geochem survey that was done. That's a big copper anomaly in what we call the attic zone. And because of that anomaly, we did drill some shallow holes back in 06, 07, I believe, but sort of 100-meter holes. And what we found was disseminated copper, platinum, and palladium everywhere, but low grade. And in fact, it was such that we stopped exploring there. But Dr. Beresford is looking at all of this, and plus our geophysical data, and he thinks that there is a high grade, or he thinks there's a shot at least at a high grade, what he calls a Volkovsky style massive copper deposit underneath this halo of low grade mineralization. And so he thinks we need to drill a little deeper here, but there could be something significant, as a copper deposit, which would be kind of nice if you get into a polymetallic situation. You've got a lot more resilience, in terms of commodity prices. So that's one target, and it's a fascinating target. And he's given us the exploration techniques, what to do next, how to explore for that. He also thinks that within the cloud of low grade that we're, modeling as an open pit mine, he said he would be surprised if there weren't semi-massive breccia pipes, probably vertically oriented, not that wide, easy to miss. But he thinks that there's going to be breccia pipes within that cloud of low grade. And because they're semi-massive, rather than disseminated or net textured sulfides, they're going to be higher grade. And so we could have a really positive impact if we could find some of those on the internal rate of return. But also, he thinks there's massive sulfide, nickel and cobalt targets at depth underneath, again, the low-grade cloud that's on top.
Right.
So just a little bit about nickel. Here's a 40-year nickel price chart, and you can see how it spikes every so often because the demand keeps growing so rapidly that supply can catch up with it and even exceed demand, as it's doing right now. But it never lasts long because the demand keeps growing. And this next slide speaks to that. This is the brown line is copper, and it just shows, if you normalize them both to 100 in the year 2000 and take it out to 2023, you can see the difference. Copper has grown steadily, but nickel is leaping ahead, largely because of the new demand driver, which is batteries, high energy density batteries. There's our capital structure. And there we go. I will stop sharing now so that you can ask, or should I leave it up? Do you have any questions that might refer back to this? Or?
No, we should be good. Yeah, that's great, Mark. Thank you.
Great. Okay.
And so, yeah, in terms of questions, I was thinking we'll stick to some more recent news in the nickel space, because obviously you guys are levered to the nickel price pretty heavily with this project.
Yes.
And will benefit greatly with a rising nickel price. So firstly, it sounds like there's some exciting news in the EV space around some new technological innovations. Maybe you can expand on that a little bit. I know there's some new exciting things in the space right now.
Well, the one thing that really caught my attention, Ben, is there was a news article out, and I think back in October, November last year, and it just sort of flew under the radar. but it involves LG Chemical, which is part of the giant consortium from South Korea. They've developed a nanometer thick membrane that goes in a battery between the cathode and the collector. And it's permeable to ions. So they go back and forth freely through this membrane. But when the temperature gets to a certain level, it shuts down the movement of ions back and forth. And it's really quite remarkable. Just for a bit of background, I mean, the central problem with making high energy density batteries is volatility.
Yep.
So the more energy density you pack into a small space, the more volatile it is, and this can lead to thermal runaway. These fires that we've all heard of. You see a Tesla sitting in a parking lot, just suddenly, boom, it's in flame. That's a bit frightening. So, and it's put limits on how much energy density you can get, and therefore how much range you can get out of your automobile. Well, this, in the experiments that they did, and it's a paper that was written in one of the Nature magazines, so very high quality, peer-reviewed science magazine. They took battery packs with no membrane installed and dropped, I think, 10 or 20 kilogram weights on them. 100% of them burst into flames. When you put the membranes in them and did the same experiment, 75% did not show any flames whatsoever. 25% of them burst into flames but shut down almost immediately. Right. I mean, if you can solve thermal runaway, you are opening the door to really high energy intensity batteries. Yeah. Which means, I mean, the best material, the best cathode material, if you want high energy intensity, is nickel. It's just physics. And there is really nothing that can replace it, at least certainly not for a similar cost. So, you're really opening the door to high energy intensity batteries, which means you're opening the door to, 1,000-mile cars for range. Right. That could really open things up. Also, I mean, just on the subject of technology, I keep thinking about robots. I mean, I'm looking at what's going on. This is getting a little far in the future, perhaps, but you look at what's going on with AI. You think about putting that into robots. It's moving fairly quickly, and I mean, it starts with things like robots include things like drones, okay, but also even humanoid robots helping out with things. You need really high energy intensity batteries. Yeah. For that use. And that could be a use that ultimately swamps electric vehicles. Yeah. So, basically in the future, you need a lot of nickel. Currently, prices are down because the Chinese have overbuilt in Indonesia. But even that is, you can see the end in sight there because the grades are dropping quite quickly there because they've been ramping through all the good stuff as quick as they can. And now they're getting to the more challenging stuff. So, we're definitely in a bad nickel market where 40% of producers are losing money, according to Macquarie, according to Jim Lennon at Macquarie. But you can see that the end's in sight. So it's just a matter of time, really.
Right. Well, in mention of Southeast Asia, my next question is somewhat related. The president of the Philippines recently introduced a bill banning raw material exports, and the Philippines, it's, I believe, the second largest nickel producer in the world. So maybe you could provide a little clarity for investors on what and how that will impact the nickel space.
Well, long term it will, but what I notice in that ban is there's a 5-year grace period. Right. So in the immediate future, I don't see any effect at all. I wish I could give you a different answer, but it wouldn't be the truth.
Yeah, no, fair enough. And then on the, what's going on between Canada and the US and all these tariff concerns, I'm curious your sort of commentary on that and maybe how this could bring home more concern and push for domestic supply of battery metals.
Yeah, I think ultimately it's going to be positive because, really the concern is the Chinese dominance of the raw material supply chain. And if you want to have a competitive automobile business in the United States, you're not going to start putting tariffs on things like nickel and critical minerals. It would be foolish.
Mhm.
And so it's not in the long-term interest, as I see it, of the United States to start imposing tariffs on critical minerals. It's just shooting themselves in the foot.
Yeah.
And therefore, I don't think it'll happen. It could be threatened, but I don't see it actually happening.
Yeah. Yeah. No, certainly. And there's a lot of battery plants and such being built in Canada right now. And we're
Yeah.
going to need some domestic supply. So lots of tailwinds, we believe, especially long term on the nickel side of things, with you guys, Giga in particular. You know, lower grade, large deposit, tons of exploration potential. And now it sounds like you know, you're going to be looking at and targeting some more higher grade zones, which is quite exciting, and that certainly could boost the economics of the project. So with that, was there anything else you wanted to mention, Mark, before closing remarks?
Well, any of the stuff that we want to explore for, um, if you discover, I mean, the Brescia pipes would enhance what we've already got, but if we hit a big high-grade copper mine at depth, you know, an underground mine, well, you know, if the grades are, it's a standalone project. Like it would be exciting in its own right, but it would also then lever this giant cornerstone asset that we've already got. So, you know, it's I very much want to get drilling.
Absolutely. No, it sounds very exciting. And with that, Mark, thank you for walking us through the Giga story today. We're looking forward to seeing everything to come in 2025. And then for our followers, if you haven't seen our initiation report on Giga Metals, you can find that on our website at atriumresearch.ca. And again, Mark, thanks for your time today.
Ben, thank you very much. It's a pleasure.